Welcome, everyone, to another deep dive. Today, we're setting our sights, well, pretty high, actually. We're looking at Virgin Galactic. For anyone following finance or just, the future of travel, they're a really interesting name in that whole space tourism area.
Oh, absolutely. Virgin Galactic is quite the case study. So today, we really want to dig into their business model, what potential investors should be thinking about, especially given, their recent news and future plans.
Yeah, we'll be looking at their latest financials, their strategic updates, and the real trigger for this chat was that Q1 2025 earnings report. Some surprising numbers in there, and of course, the big plans for their Delta-class spacecraft.
It's definitely a pivotal time for them. They're trying to move from, the VSS Unity phase into something much bigger, hopefully more scalable and profitable with this Delta fleet.
We'll break down the model, look at the pros and cons, the potential upsides versus the risks.
Exactly. And we'll highlight those key milestones you really need to watch as this whole thing plays out.
Okay, let's jump right into that recent news then. The Q1 earnings, they definitely made some noise in the market, didn't they? The stock jumped quite a bit.
It did, yeah. And what's interesting is it wasn't really about massive revenues right now. I mean, their commercial flights are paused.
Right.
Instead, I think investors were reacting to the fact that the financials, while still showing a loss, were actually better than analysts expected.
Better how? Less of a loss or more revenue than predicted?
Both, actually. The loss was narrower than forecast. And the revenue, though small, also beat the predictions. It kind of suggests the market is looking past this quiet period.
Focusing on the future potential then, and maybe how they're managing their money right now.
I think that's exactly it. You had the CEO talking confidently about a, quote, powerful and profitable business model coming with Delta. And investors seem to be, well, buying into that narrative for now. They're watching the progress on Delta, sure, but also how well Virgin Galactic controls costs while they're basically in this pre-revenue phase for the main business.
Like getting points for good planning, almost?
Sort of, yeah. Getting credit for managing the transition effectively.
And you mentioned cost control. How are they actually doing that? What are they spending on?
Well, there's a noticeable shift happening. They're moving money away from the heavy R&D needed for the first ship, VSS Unity, and putting more capital into the actual manufacturing side for the Delta fleet.
Building the factories, the tools.
Precisely. Building the physical assets, that's a really critical step. Now, looking at the Q1 numbers specifically, revenue was $461,000.
Which sounds tiny compared to a year ago, right? A big drop.
A huge drop, yeah, about 77% year over year. But that's expected with the flight pause. The key thing was that number, 461K, was higher than analysts thought it would be.
Okay, and where did that tiny bit of revenue even come from, if not from flying people?
Good question. It's mainly things like fees tied to their future astronaut program. So deposits, membership fees, that kind of thing. They've got about 700 people signed up.
Ah, so it's about keeping those ticket holders engaged while they wait for Delta.
Exactly. Holding on to that customer base.
Got it. And what about the losses? You said they were better than expected.
Yes. The net loss for Q1 was $84 million. That's 2.38 cents per share. Still a lot of money, obviously, but it's better than the $102 million they lost in Q1 last year.
Oh.
And importantly, it was better than most analysts predicted. They also managed to cut their operating expenses compared to last year, both on a standard accounting basis, GAAP, and the non-GAAP figures, which exclude some items.
So general tightening of the belt?
Seems like it. We also saw improvements in things like adjusted EBITDA and free cash flow. It all points towards them being, well, a bit more efficient with their spending right now.
Okay, so the Q1 picture, while not profitable, was less gloomy than anticipated. What are they forecasting for the next few months, the rest of the year?
They've given some guidance. For Q2, they expect free cash flow to be negative, somewhere between $105 and $115 million. So still burning cash. And revenue projected around $400,000, similar to Q1. A really key target for them is getting that quarterly spending below $100 million by the fourth quarter of this year.
That seems like a significant drop.
It is. And looking further ahead, the big prize is Delta. Once the first 2 Delta ships are running, they're aiming for $450 million in annual revenue.
Wow, okay.
And $90 to $100 million in annual EBITDA. They also mentioned planning to reopen sales for Delta flights in Q1 2026.
And how many flights would they need to hit those big numbers?
Their calculation seems to be about 5 flights per month per Delta ship, at least initially. So 10 flights a month with the first 2. These are definitely ambitious targets. Everything really hangs on getting Delta operational smoothly.
Big numbers indeed. Can we rewind slightly? How did things look leading up to this quarter, say end of last year, just for context on this cost control journey?
Sure. Looking back at Q4 and the full year 2024, you could already see that focus on managing costs while pushing forward with Delta. They kept restating the Delta timeline assembly starting March 25, which they hit.
Okay.
And then the first research flight, summer 26, and private flights, fall 26. They also highlighted that partnership with Redwire, developing those research payload lockers for Delta.
Right, the science angle.
Exactly. And it's worth remembering they did use their at-the-market or ATM equity program last year to raise some cash. We did see cash flow pinched a bit in Q3 to 24 because capital spending on Delta really started to ramp up then.
Makes sense. So where does that leave them now in terms of cash in the bank? That's always the big question for companies like this.
Critical point. As of March 31st this year, they reported $567 million in cash, cash equivalents, and marketable securities.
Okay, and based on how much they spent in Q1, how long does that last them? The runway.
If you just take the Q1 burn rate, it gives them roughly, let's see, about 4.9 quarters. So that gets them into Q2 of 2026.
Which lines up pretty closely with when they hope to start flying Delta research missions.
It does. It really highlights how crucial it is for them to stick to that Delta timeline. Any major delays could mean needing to find more cash before Delta starts bringing significant money in.
So minimal income now, but still significant costs. Where's the money going, mainly?
Yeah, with revenue just being those future astronaut fees,
Yeah.
the big costs are, well, maintaining the spaceline operations there, are fixed costs just to be ready to fly, even when you're not.
Right, staff, facilities.
Exactly. Then there's still ongoing R&D, even during the build phase for Delta. Plus the usual SG&A sales, general administrative costs, and depreciation on their existing assets. Those fixed spaceline costs really underscore why Delta needs that higher flight rate to make the whole thing work financially.
Which leads us right back to their path to profitability. It all comes down to Delta, doesn't it?
100%. The whole strategy rests on the Delta ships. Flying more often, carrying more people, 6 passengers instead of fewer on Unity.
And charging more, too.
And charging more, yeah. They expect ticket prices to be north of $600,000. They're aiming for a really high contribution margin per flight, over 80%, which is quite ambitious.
Very ambitious. How are they funding this big transition? You mentioned the ATM program.
Yes, that at-the-market program they announced late last year allows them to sell up to $300 million of stock gradually. It's a way to trickle funds in. As of the last update, they'd raised about $64.1 million through it. It helps fund things like potentially an extra mothership or the 3rd and 4th Delta ships down the line.
Okay. And what about debt? Do they have much?
Their main long-term debt is a chunk of convertible senior notes due in February 2027. The net carrying value is around $421 million.
Convertible, meaning they could turn into shares.
Potentially, yeah. There's a specific conversion price. If the stock price goes above that, note holders might convert their debt into equity, which means more shares outstanding dilution. If the stock stays below, Virgin Galactic would likely have to repay the debt in cash, which could be a challenge in early 2027, depending on their situation then.
So another thing to watch. And they're still issuing stock for employees, too.
Yes. We've seen some recent inducement awards, stock options, restricted stock units. It's standard practice to attract and keep talent, but it does add to the overall share count over time, that ongoing dilution factor for existing shareholders.
It's funny because I definitely saw a headline saying something like, Virgin Galactic falls on lower revenue share issuance. But you're saying the stock actually rose after the Q1 report.
That's a really important clarification.
Yeah.
Yes, revenue was lower year over year, and yes, they're issuing shares via the ATM. But the immediate market reaction after the Q1 report came out was positive. The stock went up.
Why?
Because those key metrics, the loss being smaller than feared, revenue beating the low forecasts, costs coming down, better EBITDA and cash flow, all surprised to the upside. The market focused on the better than expected part, not just the headline revenue drop.
So the market's giving them some breathing room, basically, focusing on the Delta progress and the cost management.
It seems that way for now, yes. That Q1 performance, beating the forecasts on those key metrics, definitely injected some optimism.
Okay, that makes sense of the recent news. Let's pull back now and look at the bigger picture. If you're looking at Virgin Galactic right now, what are the main positives, the bull case?
Starting with what we just discussed, those Q1 results being better than expected is definitely a positive sign. It suggests they can manage costs effectively during this down period, which is crucial.
And the progress on Delta itself.
Absolutely. We're seeing real, tangible steps. Assembly has started in Phoenix. They're making the tools, the parts. They're doing ground testing with their Bird facility. And importantly, they're sticking to that timeline. Glide test spring 26, research flights summer 26, private flights fall 26.
That Redwire partnership also seems interesting, adding that research capability.
Yes, that's a definite plus. Developing those specialized payload lockers positions them not just for tourism, but as a platform for suborbital research. That could be a whole other revenue stream, potentially less sensitive to luxury spending cycles.
Right.
And of course, tourism's still the core. They plan to reopen sales Q1 26, likely at that higher Delta price point.
Are there other potential positives, maybe expanding where they operate?
Yes, there's that ongoing feasibility study with Italy, with ENISE, about a possible spaceport there. That could open up the European market, which would be significant.
And the tech itself, Delta is supposed to be better.
That's the plan. Higher reusability, more capacity, easier maintenance, all key for making the economics work long term. Plus, they do have that existing backlog, around 700 future astronauts already signed up.
Those long-term financial targets you mentioned earlier also sound pretty good, if they can hit them.
They do. $450 million revenue, $100 million EBITDA with just the first 2 ships. That's an attractive goal for investors. And they're even looking at other uses for the carrier aircraft, maybe high-altitude observation or testing. The CEO also seems optimistic about getting repeat customers with Delta.
Okay, so plenty to like on the potential upside. But let's flip the coin. What are the major risks, the negative aspects investors need to weigh?
Well, the elephant in the room is that they're currently essentially pre-revenue for their main business.
Yeah.
Everything hinges on Delta working, launching on time, and scaling up.
Which means they're still burning cash.
Exactly. Ongoing cash burn, even if they manage to reduce it like they plan. And there's just massive execution risk. Building and flying spacecraft consistently and safely is incredibly hard. Delays, technical setbacks, they're always a possibility in aerospace.
And the funding aspect keeps coming up. Dilution.
Yes, the continued use of that ATM program means ongoing shareholder dilution. That's a clear negative for existing investors. Then there's that convertible debt due in 2027 that needs a solution, either repayment or conversion, which could mean more dilution.
It's also a brand new market, really.
It is. They're trying to commercialize a novel technology in a market that's still finding its feet. Competition is heating up too. Blue Origin, potentially others down the line.
And external factors, like the economy.
Definitely. This is a luxury experience. A downturn affecting high-net-worth individuals could certainly impact demand. Regulatory hurdles could also pop up as the industry matures. And one small point from Q1 customer deposits actually dipped slightly. And finally, those ambitious financial targets for Delta, they require flawless execution. There's not much room for error to hit those numbers.
So, a real mix then. Huge potential reward, but very significant hurdles and risks along the way. Which brings us to, what should people be watching? What are the absolute key milestones to monitor going forward?
Okay, yeah, there are several crucial things. First, just watch the progress on Delta assembly down in Phoenix. Are they hitting their internal markers?
Keep building on schedule.
Exactly.
Yeah.
Then, completing the build and the ground testing that's targeted for the end of 2025. A huge one will be that first Delta Glide test flight in spring 2026. That's a major de-risking event if it goes well.
Followed by powered flights.
Followed by powered test flights leading into summer 2026. That's the technical
And
stuff.
on the business side?
Watch for the reopening of ticket sales in Q1 2026. What's the demand like? What's the final pricing? Then, that first revenue flight with research payloads in summer 2026. And critically, the start of private astronaut flights in fall 2026.
Any news on Italy?
Yeah, any updates on that Italian spaceport study would be significant.
And financially?
Keep tracking their spending. Are they hitting that target of getting below $100 million quarterly spend by Q4 25? And ultimately, are they starting to achieve those big revenue and EBITDA targets once Delta's operational?
Anything else? Funding? Safety?
Absolutely. Any news on further funding rounds or major strategic partnerships would be key. Progress on alternative uses for the carrier ship. And of course, overarching everything is safety hitting key safety milestones, and getting all the necessary regulatory approvals.
Lots of moving parts then. Clear checkpoints to watch for over the next, what, year or two?
Exactly. It's a story with very specific milestones coming up that will really tell us if they're on track to deliver on that long-term vision.
Well, that feels like a good place to wrap up our deep dive on Virgin Galactic. So just to sum up, it's a company at a really fascinating, critical point. They're moving from that initial phase to the big promise of the Delta class.
Mm-hmm. And that means this real mix of potentially huge rewards if Delta succeeds and hits those ambitious targets, but also, very real risks around execution, funding, and just the nature of this new market.
So for anyone looking at this as an investment, it really is that classic high-risk, potentially high-reward scenario, isn't it? You're betting on cutting-edge tech in a brand new industry.
Absolutely. Staying plugged into those milestones we listed, watching the financials closely, that's going to be essential for tracking their progress and judging whether this bet looks like it might pay off.
Great advice. Thank you for walking us through all that detail. And thanks to all of you for listening to Stock Explorers. We really appreciate you tuning in.
Yeah, thanks, everyone.
Please do remember to subscribe if you haven't. Maybe give us a like and hit that notification bell so you catch our next deep dive. And maybe just think about what it would mean if space tourism really does take off in a big way. Something to ponder until next time.